Hello, this is Derek Iswell, Chief Investment Officer for Shelton Capital Management, with another Shelton CIO Minute. Today, I want to talk about real interest rates, that is, the rate of return above inflation, particularly as it pertains to bond markets. Now, real interest rates can be measured in the market by looking at the spread between Treasury yields over what's known as the break-even rate, or the rate of inflation implied in the market by inflation-protected treasuries known as TIPS. Now, this chart shows the real rates of return since the creation of inflation-protected securities back in the late 1990s. And you can see that with the recent rise in bond yields over the past few months, across all maturities, real rates are as high as they've been in 20 years. Now, high real interest rates are usually a drag on equity markets, but over this recent rise of the past several months, equities have held up pretty well. And so one of two things is going on. Either the equity market believes that interest rates are too high and they're going to come down, or the equity market needs to correct down to a level appropriate for this level of real interest rates. Either way, something has to give. However, there's one other perspective worth paying attention to in this big move in rates, is that at these levels, TIPS themselves might be worth a look in your fixed income allocation. If for further questions or information, please don't hesitate to contact your local Shelton Capital representative. This has been a Shelton Capital CIO Minute.